So I think it's going to be an exciting time. And of course, this session is going to be really interesting because this is, we're talking about the year of halving, the years ago, Bitcoin, Ethereum ETF. So yeah, so let's really dive in as because this is where we're plucking the brain as from the VC, and I think this is it's definitely a momentous moment for all startups as out there. If you want to have more knowledge, insights, I think this is the time for you to come. So let's just dive in. So very quickly, in a one-liner, could you just quickly introduce yourself? What do you do, and what specifically is industries that are you investing in?
So pleasure to meet you all. My name is Anton Golub. I'm a venture partner at Full Stack VC. I'm a part-time founder in crypto industry since 2013. So seen both sides as a founder and a builder, but also as an investor. On our side, we are focused on real-world assets, tokenization of real-world assets, decentralized physical infrastructure, intersection between crypto and AI, and DeFi on Bitcoin.
Thank you. My name is Sofer again, for those who just arrived. I'm the managing director of Block Dojo Philippines. We are UK-based venture builder. We invest in idea stage to early stage Web3 companies. And in the Philippines, there's not a lot of investors yet in this particular theme, right? So this is we're running our second cohort right now, and we're about to launch for our third cohort. So we're very much really passionate about looking for real world problems getting solved by technology. So that's what we're about.
Thank you so much, Jen. So pretty much you guys are investing everything, which is actually relevant and relatable today, the current trend as right now. So speaking of trend, I mean, this year is definitely a very exciting year, the year of halving. There's so much of excitement that's going on. I mean, this is where we always say, right, the Web3 is investors and builders. It's like the halving year is like a leap year. So once in every 4 years, we're all looking forward to it because everyone will be expecting, oh, the crypto will be mooning and all that. No, but specifically for you guys, what are the promising trends that you're looking at considering with all the excitement and the noise in the market? Yeah.
So just to mention from our perspective, actually, you mentioned halving as a very, very, relevant event for us as an industry. But I want to point out that from my perspective, really, but the biggest thing that happened this year happened at the beginning of the year, which was actually the approval of the spot Bitcoin ETFs. This was really, really a massive event for the whole crypto industry because you had the world's biggest market, which is the US market, finally has a product to access and get exposure to Bitcoin for the moment, and now soon Ethereum and so on. And why that is so important is because the extreme amount of liquidity will come into the crypto ecosystem through that instrument in the next coming years. And just to give you a little bit of tangible what that means, there are some estimates, conservative ones, that over the next 3 years, $40 billion will enter to this spot Bitcoin ETFs, which is conservative, but it's a huge number actually. And now the reason why I want to first emphasize that is because this most important event today, the infrastructure to enable that was built many years ago. So if you take a look at how was that actually happened is because you had Coinbase as the main prime broker. They also provide custody. Fidelity is offering custody services. There's this merger between Wall Street and crypto industry. But if you reflect on it, the biggest event for this year, the infrastructure was put in place many, many years ago. So now when I talk about the narratives that are happening this year, they might be relevant for us in 5 to 6 years. And I kind of mentioned something that's very exciting for us, which is again on the intersection of the crypto world and the real world is tokenization of real world assets. So kind of if you talk to people and you tell them, close your eyes and how does the future look like, they will tell you everything will be tokenized, right? This is what we all talk about. But then when you take a look at the reality, the total liquidity in real world assets is like 3 billion now, which is it's nothing. It's microscopic. You have meme coins that have more liquidity than tokenization of real world assets. So all of these things that I mentioned that were interesting from an investment point of view, so tokenization of real world assets, that will happen many years into the future. This intersection of crypto and AI, today it's not even clear what AI is the use case, how is the business model. So we are building the infrastructure for next year's. Maybe perhaps the most speculative is this decentralized physical infrastructure, how we can actually connect the devices we use every day in a decentralized manner to add value to people and create valuable products. So I mentioned a couple of these narratives, highly interesting for us. And maybe to wrap it up, I think the most interesting narrative from a VC perspective where the VCs are not participating is actually meme coins. Can you imagine it? Fortunes have been made and lost, you know, on something that is really purely crypto community driven, and very, very few VCs that I know have actually managed to participate in the upside.
Yeah, actually, I want to build on that. Like, given that crypto, because of the ETF, like news, right? Like that, there's now like a spot ETF and Bitcoin. What we actually are more paying attention to is that blockchain becomes now more acceptable to the public, because if institutional money is coming into crypto, and crypto is just one offshoot of blockchain. So because we believe in the technology of blockchain itself and what it could do, then a lot of people now can get interested in blockchain applied to digital identity, blockchain applied to, let's say, tokenization, as he mentioned. These trends is really what open up industries beyond, because we're moving away now from the hype of just, let's wait for this to go up, right? Now people actually want to do something with it, have projects in it, because they almost got permission, given that institutional money which is very highly regulated, right, is now coming in. That means the appetite of the market is finally allowing it. So my analogy to it is like when Uber first came to a lot of markets. So there's a real story. I was living in Malaysia a couple of years ago, and Grab, the original Grab at that time, My Taxi, and Uber were in the market. They were, the taxi drivers were basically pretending as passengers and beating up the drivers. So they were really angry about it. And then they were saying this is illegal even. So at that time, a lot of these technologies are not accounted for legally. But because the institution, when they start to allow it and say, okay, this is legal now, there's a framework, it's finally caught up, then we just treat it as everyday life now. Like we take Grab or Uber all the time and no one really questions it anymore. Everyone's accepted it. So this is kind of that moment wherein the inflection point of something that we don't understand has become now institutionalized. And then now it allows us to branch out to other uses of the technology. And then these technologies start to converge with AI and blockchain and IoT, and all of these things start to come together. Yeah.
So, you know, Anton, you mentioned about the ETF as a guy that's really being very important. And I always remember this graph as a guy that where it shows that the adoption as a guy for the ETF as a guy Bitcoin, it's way as a guy far ahead as a guy. I think in equivalence to the goals like ETF, it's probably like 1 month as like a Bitcoin, as a ETF adoption is equivalent to the last 10 years as the goals like adoption. And I think to me, it's like that's what is actually really filling like the entire like Web3 like adoption apart as like from the year of halving. I mean, the year of halving is like it's just like the phenomenon is like it's by default. But very interesting that you mentioned is about tokenization. I mean, real world like assets. BlackRock like has gone into it. Ondo like, happens to be one of, like, of my biggest interests. I've been following so closely with Ondo, and I think recently like, we have also seen the market has like, been pumped like, as well. And with real world assets, it's also being part of a securities assets at the same time. And I think there will be, everyone is just debating, there could possibly be a delayed gratification to it. Now, in all these verticals, we spoke about the decentralized physical infrastructure, DPIN, right now it's known as DPIN. Back then, last 2 years ago, it was just known as what? PO, proof of physical work, right? And now they're changing the name itself. So we have DPIN, we have real world assets, and all these verticals. Now, Chris, Anton, what verticals are you guys truly excited of? I know it's all about really having a real use case, it's really having the use case utility, but which vertical are you guys excited of and why? And at the same time, also meme tokens are being mentioned too. And then come and think about it. Meme tokens are the one actually, people are saying that probably bringing the biggest influx of wealth in this bull run. So what is the take on this, guys?
So maybe I can kick off actually with meme coins because they're a very interesting phenomenon. And one thing that actually really fascinates me that with meme coins is actually very difficult to determine the valuation and what's the total addressable market actually. And I'll tell you why, because the way I perceive meme coins, it's kind of like tokenizing human attention, tokenizing human culture, And first of all, when you reflect on it, you would say, how can we actually create a value, a foundational valuation model, actually? And then when you think about it, it's actually very, very difficult. And that's actually awesome, because when it's difficult to determine the right price, that means the right price can be anywhere. It can be, sky high, and it can be sky low. But I think the reason why meme coins have such actually big success so far is because potentially the total addressable market is every person on the planet. Because every person on the planet can identify with a certain trend, certain culture. And if you kind of think about it, everybody can be a buyer of Dogecoin, actually. If you think about it, it's just like an interesting cultural thing. Everybody can be a part of it. So my addressable market is like 8 billion people, in theory, actually. And I think like that might be the reason why, so many people are kind of jumping into that, thinking like for a lot of people it's their first exposure. Like if they buy their first crypto, today maybe it's even less Bitcoin and more actually a meme coin because of this, cultural aspect in which people can easily identify it. But I think from a investor perspective, if you're institutional investors, meme coins are so difficult actually, right? Because if you invest and your LPs then ask you, why did you deploy capital into a meme coin, and you try to explain it to them, you will sound very silly actually, right? So I think, meme coins are really something that will be part of the community for a long time. I know a lot of proprietary trading firms, a lot of hedge funds are investing into meme coin, but for the moment, actually on the VC side, it's just not like a realistic thing. I think maybe in the future, if we're talking about tokenizing art or tokenizing, something related to a culture, but on a more serious basis, that's where we can maybe jump in or be a part of the builders of the infrastructure. So how can you create meme coins? Actually, in a very easy way, but to jump in directly on them, I think this is super highly speculative and not part of the everyday VC experience.
Chris, I want to jump in about meme coin, because I think meme coin right now, it seems to every player want to prove, hey, there's a use case as a meme coin. Even Shiba Inu coins, it's building on a decentralized and proving that it has its own use case. And we're seeing some of these meme coins has been pumping. Now, as a VC on a venture studio, between the immense profit that you could potentially make versus the rationale and the logic a real use case, which side are you more inclined towards to coming from an angle of a VC or a venture studio?
Yeah, so I think that's a good. I mean, to answer, I'll synthesize from what he mentioned. It's very hard to explain. Like as an asset, if you try to invest in something like that, you're gonna have a hard time explaining it to your investors, right? Because then but it does kind of make sense. Like for us, our mandate, we don't touch meme coins. And when we only invest in startups who are working on the utility side. But I actually just want to say that it is an interesting phenomenon, because if you also look at, let's stay away from meme coins, but GameStop, for example, it was just on the news again yesterday that essentially it's going back up. So once you've actually commodified like equity or stock or like coins, even just the mere fact that someone can buy it in the current market, it creates value all of a sudden, even though someone can question a fundamental value underneath, but it can happen, right? So I think it depends on the mandate of your investment. If you're purely just to, because there's a speculative aspect of that, right? Which is, I guess, what a lot of investors are kind of wary of, right? Because there's no way to justify, and then sometimes you hit it big, sometimes you don't. For us, we are more utility focused. So if you're asking verticals, there's not one particular, but we're excited about, I think he mentioned a few, let's say tokenization, for example, in real estate, in prop tech. It's a very disorganized market, but if you actually have a secure way of tokenizing at least the representation of a lot of these assets, they get organized in a lot more trust-based way, or proof-based way, sorry, not trust. So, because blockchain is about proof, right? Healthcare even, let's say records. Like as simple as if my digital ID, government ID, gets linked to my insurance, my passport, my visas, and or voting even, then all of these powered by blockchain becomes a very interesting space. So if Web3 or like the next iteration of the internet is a lot more secure and all of these elements are there, it creates whole new industries on its own, right? So for us, we're a little bit industry agnostic because we do want to, everyone is on an experimentation mode. because they all testing whether the market is ready for some of the solutions that are converging from these technologies.
May I just add something actually, because there's a lot of discussion around tokenization of real world assets, and I personally think, and also on a professional basis so far, has been complete failure actually. So even though we talk about it all the time, it's been a complete failure. And usually when I talk to people about real world assets and I tell them like, do you know how it works? And people kind of close their eyes and they're like, yeah, you kind of create a token and then that token represents the real world assets. And I tell them, no, this is exactly not how it works. Tokenization real world assets, the way it works is you actually have the real world assets, and then you create something called a special purpose vehicle, which is a fund if you come from the finance industry. And then the special purpose vehicle buys, holds, and manages the real world asset. And then we tokenize the share units of the special purpose vehicle. And now if you kind of think about it, you would say, this sounds extremely complicated. Why would anybody do that? And the answer is, yes, it's extremely complicated, and nobody would ever do that, right? So the reason why you can actually, because I think it's an interesting contrast. We talk about meme coins, and now I talk about something very real, but the liquidity in meme coins, it's 100 times bigger than in real world assets, where it's sitting at 3 billion. So 3 billion is nothing, and it's basically tokenized US treasuries, actually. And the reason is the problem is what you hinted at, is the laws and regulation. So to make real world assets a massive success stories, you literally need to change laws. And this takes time because politicians take a long time to agree, and this will be a difficult story.
So you really hit the bullseye by saying that. I mean, there's so much of use cases and real use to that, but it's going to take time because all these forces are under the security assets. And with that being said, that has to go through the proper corporate governance, regulation. So here's the thing, while this is actually potentially bringing, it makes perfect sense, bridging the gap between the digital world and also the real world assets. In your point of view, how long do you really see this were able to materialize that?
Yeah. So just to mention, there are positive cases around the world where the governments have literally changed laws to enable direct tokenization of assets and direct ownership. So one example is in Switzerland. The government, it took it 2 years, but after 2 years, it literally approved something called the DLT law, the distributed ledger technology law, where they defined actually how you can do direct tokenization of assets. Same happened in Liechtenstein a bit later, and then now in Europe through MiCA, which is this European digital asset regulation, they also defined that. So this is all great, right? This is all awesome. And by the way, you have some examples in Asia as well, in some very specific countries where they have enabled that. And that's a great positive sign for institutional investors. But when I talk to the institutional investors who are supposed to deploy capital into those tokenized real world assets, they tell me, that's great, but we still haven't had precedents in court, because they're all afraid if we end up in court, what will actually the court decide? Because you don't really have these cases where it went through court, the court identified and interpreted the law correctly, and litigations actually got closed in a satisfying manner. So I think for many people, it's still highly risky, and that's why they resort back to the complicated use case or special purpose vehicles, because this is in the old traditional security space. But if you ask me, I think it will take way too long. And that's kind of what is the problem. You mentioned BlackRock, and not only them, but a couple of other players are also working on tokenization of real world assets. But if you take a closer look, they're all doing it on closed systems. So this is a closed distributed ledger within their systems where nobody has access to, and they run the show there. And you can call me, idealist, but I don't believe that's the future, because it's just, you don't have the network effects like you do when you have an open platform like public blockchains.
Let's talk more about the practice as a VC. Chris, I used to run a venture studio, and I will never forget, every conference that I go to, usually I'm like honey, and all this is a startup projects will be flocking to me. And oftentimes, people oftentimes think, VC is about giving money. But I think many times we don't realize VC actually have to be accountable to the LPs as well. And the role and responsibilities of a VC is to actually getting good deals. Now, I want to plug your brain on this, and especially we're sitting in a very sweet spot right now in the Southeast Asia, which I always label and define it as the world's gateway, Web3. In your point of view, there's capital to deploy, and VCs are unlocking the dry powder as well. And of course, right now, It's the bull run, TGEs, it has to be in 12-month investing. Everyone is jumping on the bandwagon. There's huge amount of liquidity. So now, how do you evaluate projects? Well, I'm sure right now, so on your desk, there are probably tons of pitch decks and docs and links that you're receiving on a daily basis. So how do you, number one, mitigate the risk as a VC, a venture studio? And secondly, so what are the factors that you look in, especially and primarily during the bull run?
Yeah, that's a great question. So we're a bit of a unique space because we're focused on idea stage founders. So that means, because it's such the technology convergence of AI, blockchain, all of these are still very raw at the moment. It means, to me, I'll say this as from an investment standpoint, anyone who can say they can accurately evaluate this is saying bullshit, right? Because you cannot evaluate properly at this stage when the market is not known. So we've taken a very seemingly counterintuitive approach where we now, because we're pegging on the fact that we are a venture studio, a venture builder, we focus our investment more into the founder and then their ability to be intimate with the problem that they're solving. That de-risks us if we can then see there's a real problem that if we solve it in general first, someone will be willing to pay for it. Then the technology just becomes a booster in some way rather than let's speculate on how much this trend will be caught up. Like he said, it's going to take a long time for regulatory to be able to catch up anyways. So we can circumvent the regulation and the ease of doing business for being slow by knowing which founders can figure it out in the meantime and basing our principles on finding great founders who have grit, problem-solving skills, ability to communicate, right, knows who they are and knows how they can capture the community around that. Then that's a lot more important for us in terms of our investment kind of parameters rather than the idea. Because ideas will change. Like any founder knows that your first idea doesn't end up the same even in 3 months. So then knowing that and practicing that, then we focus really more on, does this founder have the edge and then the passion to solve that particular problem? And then we provide the skill sets, the network, the ability to network them with further investments. Then that's our bet, right? Our gamble is if we find the best founders, and then they could figure out in the meantime, because regulatory is going to take a while to catch up, then technology will be useful now, and then we just scale it with them, right? So that's our approach.
So founder fit, market fit, product fit, in the end. Now, of course, I'm sure definitely right now you guys have started slowly writing some check, whatever check size. We'll come to that part later on, just to keep our startup founders here to be a little bit more excited. But what have we learned from the past? What do you think will be the biggest change for VC practice as the previous bull run?
So, I think that's the biggest change actually that's happening now. I don't think it's related to the crypto industry per se, but I think the barriers to entry to become a founder with some of the AI tools that are out there has really went down to zero pretty much. So when I founded my first crypto startup, which was more than 10 years ago, you really needed to raise some serious money if you were building an infrastructure project. And today, I think now this is like maybe being a bit controversial here, but I think in the future, near future actually, the cost of you starting a business will be close to zero actually. So I don't mean build a full-blown business actually, but I mean actually validating your idea, building a community, building a client pipeline, doing your marketing material, even maybe having a prototype, and you do it with a few actually prompts in ChatGPT. So, and maybe to also say something controversial, and usually in the VC world, we all say, ideas are nothing, execution is everything. But if you have ChatGPT or equivalent who can do many things for you, then ideas are everything and execution is nothing actually. So then the best idea wins and not necessarily who is the most competent to execute on certain things. So I think that in the near future, maybe this is going to be a challenge for us, like this pre-seed, seed stage, the amount of capital you will need to get there will be close to zero actually. And then only we will be able to come in, only once the business case will be validated, we'll have some, ideas that this will work, whatever they have in mind. And
what about the investing style?
So,
so will it change? Has it changed the way how VCs are investing as compared to the previous bull run?
I mean, look, so first I want to differentiate if you're investing in equity or investing in tokens, actually. So equity is a super long-term game. You're looking at a liquidity event in 7 years.
Let's talk about token, because every investor's right now going
on
into
the,
tokens.
on the other side, you know, the amazing thing about being a crypto startup in being able to issue a token is the liquidity of the token. That's the whole game, actually, because within a year time period, 2 years, maybe a bit longer, everybody gets liquidity. Not only it's the project, the team, the advisors, the investors, everybody gets liquidity. And I think then the biggest challenge, this is what I have seen because I ran a market making company as well, is that the problem is that if you don't have a clear use case for your technology and for your product, and if the revenue streams and the use of the product doesn't translate nicely into the token can end up being dead, even though the project has an amazing actually product and amazing revenues and amazing clients. So, and the reason for that is because actually token is just it's utility token. You can just use it. It's from an accounting perspective, it's pre-booked revenues actually, because you can use the token in a product. So it's kind of, I get the revenues upfront when I sell the token. And at least equity gives you ownership, gives you in theory dividends, even though no startup ever gave out dividends, you know, or very few have done. So I think the style has changed a little bit, that today a lot of the tokens that are being launched, especially with bigger projects, the valuations are like multi-billion. So when the token is launched, the project is already sitting on a couple of billion of valuation, but this was not the case in the previous bull market. I don't know if you remember, Ethereum in 2015 launched with 35 million valuation. 35 million. Today they're launching garbage projects that nobody will ever use. 1 billion valuation actually. So I think that's a bit of a misincentives from our industry, especially on the investor side and the exchange side, because the exchanges push the projects and the investors push the projects to list the token at super high valuations, right? So that everybody can cash out and lock in the profits. But then that basically kills the token. And I think this is like something, I mean, this has been addressed a little bit in our industry. You know, Binance has really clearly stated that they want to start listing projects at the lower valuations, not the multi-billion ones. But I'm not sure if that's the solution, because everybody wants high valuations. But then there is no money to be made for the people who buy in later, which is the retail.
And I also think
retail loses money, which is the worst thing.
And I also think tokens investing is it's a love-hate relationship. Like today, it's it can go pump up, it's like 100x. And tomorrow, it's the value of token is can go all the way down, even below zero, with a lot of decimals in front. I mean, especially what we have seen 2 years ago with the catastrophic year. Yeah, Chris, do you have anything to add on?
Yeah, I think another thing I'll add to that is the climate has changed after the bull run a little bit, where a lot of institutional investors are becoming more like, the VCs are becoming more like PEs really, in terms of appetite, because of it creates a space for some smaller ones, or people want to take bigger bets, I guess, because then everyone is avoiding the bubble and the high valuations, right? So that's why people are becoming a bit more conservative. The economy is shifting a little bit, but then so the downside of that is the capital flow might be a little slower, but the capital is there. But the upside is actually it's forcing founders and startups to be really a lot more viable-minded. Like, they won't just come up with something that's irrelevant. They're being pushed to validate this a lot earlier rather than validate it later. And I think that's a big impact that we want to ride that trend on. And I love what he said about if ChatGPT and all of these sort of tools, because there's no more barrier to entry for founders to acquire them. So what you need is really now the skills, the network, that someone cannot do alone, right? So I think the value then of the ecosystem where we play, let's say Venture Studios and all of these other players here, is that anyone can start, but now can they get good guidance and the network to speed it even up, right? Because then the tools are a lot more accessible, right? So can you have a community space? Can you build your habits around it? So I think this is the opportunity where the market shifts a little bit. As it becomes a little bit more conservative, it pushes people to be a lot more scrappy and creative on how they can target and isolate the right market to disrupt.
For the interest of time and also our startup founders here, so could you guys share, last but not least, so what is the average check size are you guys writing right now? It's also good for me to know, so I can pitch to you guys as right after this as well. And so, what makes a A-lister project?
So ticket sizes are obviously depends if we're the lead investor or not. So if we are the lead investor and if it's like a pre-seed seed stage, it's from 250,000 up to 1 million. And if we're not the lead investor, then we have a smaller ticket size. And sorry, what was the second question?
Oh, what makes an A-lister project?
Look, I think you actually said it the best. It's all about the team. Because the team needs to figure out what will the project will be about. I remember my startups, if you take a look at the first deck I created and a 5-year later one, you'll say, Anton, these were not the same companies at all. And kind of it's basically the team, we're there to support them and get out of the way and do the best that we can, but it's in the end all about the people.
Amazing. For us, we're a venture studio in idea stage, so a lot of our value that we offer is more in the program value. We're in a 3-month program. From 0 to at least an MVP by the end of it. But on top of that, we do add £10,000 check if you're in Europe, and then here about 10,000 US dollars. So that's what we offer. But obviously the promise is more, the valuation is probably more in the program value because it's almost like a free startup MBA, right? But you actually get to do your stuff and then you get supported. So that's the value that we offer.
Cool, guys. You guys know who to look for right now, then. Thank you so much, Jens. And thank you so much for joining us on the second day of this panel discussion. Thank you.
Thank you very much.